Hey, this is Warren Redlick. I'm here with Larry Goldberg. Larry is a longtime Tesla investor and longtime investor. We shared a stage at TeslaCon, Texas. It was bulls versus hyperbulls. I was on the hyperbull side. Larry was on the bull side. I think Larry may have moved over partially into the hyperbull camp. He had a tweet thread on April 1st. He tells me it was not an April Fool's joke, where in the tweet thread, he projected 30 million vehicles sold in 2030. I think he may have backed off of that a little bit, but I like the positivity. So we're going to dive into that. Before we dive into the tweet thread, Larry, would you please tell the audience a little bit more about yourself?
Warren, I'm a long time software person. I've built several companies. My last was Sapiens Decision, which I've just retired from, and I still, have an interest there. But it was probably my third company in the United States, and 6 or 7 companies in my career. Some of them have been quite successful, some less so. But I'm a long-time investor in stocks. But my investment in stocks, I have a philosophy of not investing a very large proportion of my assets in stocks, and also being very focused on a particular profile, which led me to Tesla. The fact that I'm South African in background, sort of gave me an interest in Elon, and we have some background in common. But I'm pretty committed to Tesla, and that's the story.
You and I had an exchange at TeslaCon, Texas, by the way, which I thought was great. And I think if people go back and look at, there's a video of it, and of the bulls versus hyperbulls at TeslaCon, Texas was a great conversation. It wasn't just the two of us; it was a group. So there was this tweet thread you did April 1st, and I'll put this on the screen later. Like when I do editing, I'll put it on the screen. So if you're in the audience, you can probably see it now. You started off by talking about some dispute between Gary Black and Farzad Mesbahi. Gary Black 00 on Twitter and Farziness on Twitter 00. I think Gary is projecting 10 million vehicles in 2030, and Farzad is projecting 20 million vehicles in 2030. And you responded to that. What was your response? What's your general? First of all, sorry, go back. What's the backstory of the dispute between Gary and Farzad?
Well, Gary's saying, temper your enthusiasm. Life is not always going to go your way. There's going to be pushback. Get real. 10 million's a big number. Be happy with it. And it's not a bad philosophy. If you can show it's going to do very well at 10 million, then anything better than that is really a huge plus. Farhad is saying, look, we're looking at what Elon is saying, and I looked at it too, and I have to say that the evidence on Tesla's side in terms of its future and Farhad's projection is very strong, and that's really the basis of my judgment. I'm looking at their track record. I'm looking at what they have revealed to date, and particularly in the investor day that they held. I'm looking at what they're doing, and I'm a believer. I tend to place a lot of credence in what they say. Elon is famous, and he admits that he's famous for being able to deliver, but deliver late. What does he call it? He can do the impossible, but he translates the impossible into the late. So,
the line, it was in an Everyday Astronaut interview on Starbase, and Elon said, we turn impossible into late. And I'm wearing the insanely gigantic t-shirt, which is another Elon quote about self-driving cars.
Right.
I do have a new turn impossible into late t-shirt there at elonbits.com, but please go ahead.
Yeah, so I just did an analysis looking at whether I thought it was feasible for them to do what they're talking about, that is a 50% per annum growth, and then looked at their track record, thought about what they're doing, and then projected it forward, and you get to 30 million by 2030. That's that's a little high, but I think, and the law of large numbers, and Gary's correct in this. The law of large numbers are going to make each year dramatically more difficult. So one has to temper that a bit. But I thought that it wasn't an unfair projection from Farhad. And I have to say, if you look at the results of last quarter, I mean, they are just remorseless. Tesla is just remorseless. I would hate to be another OEM right now. It's just such a tough position to be in. And, they talk a good game. That's really difficult.
Yeah. I just want to mention really quick that it's not just Elon talking about 20 million vehicles in 2030. Yeah. Drew Baglino talks about 20 million vehicles in 2030. I think you were at the shareholder meeting.
I was. And
at the shareholder meeting, Robin Denholm, chairman of the board of Tesla, said the 20 million vehicles. I have this thing about Elon, not just with Tesla, but with SpaceX and his other companies. When Elon makes a projection and nobody else on the team says it, it's Elon maybe going into vaporware, going into the reality distortion field that Steve Jobs is so famous for. But when the rest of the team starts saying the same things, when Andrej Karpathy says, "Yeah, FSD is solvable," we're there. I think he said it's a solved problem. It's just iterating. When the team is on board, when Gwynne Shotwell says we're going to do Starship Earth to Earth in 10 years, when that to me is a different level than when Elon's saying it and nobody else on the team is saying it. So I think that's a big difference. But let's dive into your tweet thread if that's okay.
Yeah, sure. And wise words. I think that's a very, very good observation. I would just add Zach Kirkhorn's name to that.
Oh yeah.
In Zach, I have a high level of regard for him, and he's proven his worth. I loved the guy when he joined. I could see the work that he had done before he actually got the job, the top job, and I just love what he's done with presentation of the numbers, but also the way he's approached the job. So I think he's added tremendous luster to the team. So you want me to talk about my tweet thread?
Well, I'll dive in. So the
sure.
Start of the thread was, you mentioned the dispute, and then you dove in and you said the argument all hinges on Tesla's ability to meet two serious challenges: scaling production and driving sales to the rate necessary. Tesla produced just 1.37 million vehicles in 2022. 30 million sales is 26% of 2022 global vehicle sales, or 21% of 2016, which was peak global production. That's something I think a lot of people don't know, is that before there was this series of crises starting in 2017 or whatever, there's different things that were happening that sort of made the global economy kind of freak out a little bit. So there was this point in time where I think global sales were around 75 million, and we've dipped to maybe 60 million if I'm in the rough ballpark. Maybe that's, you've got
the slide, and I'll look at those numbers with you. Yeah.
But anyway, there was a peak of vehicle sales in the past, and we've dipped a bit from that peak. So the target that's a pretty big target to get to 26 or 21 or 30% of global vehicle sales. That's a pretty big, bold statement. Or maybe it was 90 million and it dropped to 75 million. I forget the numbers, but it's pretty bold to say you're going to get there. At the same time, I assume you have something like this, right? And when Apple came out with the iPhone, the legacy phone makers did not see the asteroid coming down to destroy their world. And Tesla has shown up. I think Legacy Auto does now see the asteroid coming. I think they see it. They didn't see it in 2019. Do
you remember?
They see.
Do you remember the BlackBerry?
Oh yeah.
Do you remember BlackBerry's response to the iPhone?
No.
Yeah, BlackBerry said, "Yeah, it's interesting, but people want their buttons."
Yeah.
They stuck to that for several years as their phone sales plunged.
Yeah, people like the sound of a gasoline engine, right?
Yeah, people like their buttons. That's just so classic. But when the asteroid is dropping, people just don't want to look up. That's the bottom line on this. And the asteroid is dropping. Now, there's some really, hard work being done by a lot of people, and I'll talk about that, but it's going to be really, really hard for them to catch up with this asteroid. I mean, they are gathering some incredible momentum. Incredible. And, people are focused on, what Mary Barris is or what BYD is doing and so on and so forth, but it's really, really hard. And for reasons that are very clear.
Yeah, I think Kia and Hyundai are probably doing the best of legacy auto. There's a new Kia, it's the EV6, that's probably the closest thing yet to the 2018 Model 3.
Yep.
It actually has more range, but it doesn't have the performance. It doesn't have the software. It doesn't have the supercharging network. It's probably not as nice of a car, but I feel like the legacy auto industry is trying to catch up to the 2018 Model 3.
Yes.
And they're not there yet. And Tesla's already working on the next generation vehicle and the Cybertruck and more, and they're so far behind on all that.
Yeah, and the truth is, Tesla doesn't have the breadth of engineering that some of these OEMs that are many, many generations older than they are have. And, I remember Elon in some interview talking, with yearning in his voice. It's amazing they can do 3, 4, 5, 6 cars at the same time. We can only do one, referring to doing a new model. And you could see the pain. You could feel the pain. And now I think they're reaching a point where they can actually do multiple models. I think we may be at that break point for them. And if that's so, that's a very important moment, because the need to develop multiple models, not as many as the rest of the OEMs have, and I'll talk about that, but the need to add more segmented components to their model line is very important. There was a fantastic tweet this morning, and I retweeted it, by a gentleman I don't know, but he did an analysis of the sales in Europe and showed how the Model Y and 3 are both completely busting their segments in terms of who they should be selling to and which market they fit into, what percentage of the market they should be able to get. And that completely busted, across multiple segments, which is what Tesla has done, and which is part of my thesis, by the way. And so it's very clear that they're breaking the mold. It's very clear they're the buttonless phone. It's very clear that the iPhone that's changed the game. And it's very clear that the others are rushing to catch up, but they're continuing to follow the OEM mold. They continue to follow the classic path beaten by, General Motors in 1920.
Yeah.
And it's not going to work.
Right.
And I'll talk about where sales are going and what I see for the future. But let me get to my tweet. I'll stop getting.
Well, sure. So you started off with Tesla's strategic plan, and you hit this point that Model Y still is going to grow as both Texas and Berlin have far further to scale. I think Giga Berlin announced that they achieved 5,000 a week, and Giga Texas announced they achieved 4,000 a week. They're both aiming to 10,000 a week and possibly more than that. So, and that's all Model Y. Fremont makes Model Y, Shanghai makes Model Y. I think we're heading towards a world where Tesla is making at least 1.5 million Model Ys a year. One of the things I wanted to mention about that, though, was I have a Model 3 from 2018. That's actually Omar Kazi, Omar's Catalog's Model 3 that Elon signed the visor. I'm currently driving a Model X Plaid. I'm actually going to be selling it and going back to my Model 3. I think the Model 3 is a spectacular car, but I feel like Model 3 may have topped out. like, I think we're at something like probably more than 500,000 Model 3s a year between Shanghai and Fremont, but it's notable that they're not making Model 3 in Texas. They're not making Model 3 in Berlin. There's no apparent plan to expand Model 3 production. Maybe there'll be some growth at the existing factories. Maybe there'll be some modification going to, front and rear castings. There's some potential to continue to innovate on the Model 3 platform, but it seems like the Tesla team has decided Model 3 is good where it is. And it's also possible that the next generation vehicle platform will sort of undercut demand for Model 3 in the same way that I think Model 3 has undercut Model S. Do you have any thoughts before we dive into the rest of the plan on the future of Model 3?
Yeah, I think Model 3 has a strong place, a continuing place in the lineup. I have a Model 3 and a Model X, and bought the X for my wife because she had a Hyundai Elantra, but she preferred the 3 to drive. She loves driving that 3. It just fits her very nicely. And I enjoy the X. I've taken it on 2 road trips, one northwest and the other southeast, or southwest actually, sorry. And I just love that car. I really just love that car. So I think Model 3 is a good place in the lineup. I don't think it's going to go away. I think they are going to upgrade it to the Y standard, and perhaps beyond. So I don't think it's going to go away, but the volumes aren't going to get anything as crazy as the Y, and even the Y is going to suffer in volumes when the next model comes out, because it's broken through its category. It's broken through, the natural buyer for the Y is smaller than the buyers because that's all they can get from Tesla. But as the range expands, it's never going to be the 37 models of General Motors, thank goodness. But it's going to be more models, and they're going to be a little bit less. I mean, the volumes may grow actually as the total volume of the fleet grows, and more markets are opened. It's still amazing that Tesla is still opening markets. I mean, right. Every day.
But it seems like S and X reached a certain plateau, maybe even came down a bit from a peak. Model 3 reached a certain plateau. I don't think Model 3 has shrunk, but it doesn't seem to be growing anymore. Model Y is still rising. I agree with you. It's still growing. I think there's still plenty of room for Model Y to grow. I think as they innovate on cost on Model Y, I almost wonder if they're going to not only take Model 3 to what Model Y is doing, but take Model 3 and Model Y both to the unboxed process that they showed at Investor Day. And Drew Baglino said something about they still think they can get another 20. I think it wasn't Investor Day. There was some point where I heard Drew Baglino talking, and he said he thought they could get another $2,500 or $300,000 in cost out of building the Model 3 and Y platform. So I think there's still some room for cost reduction, and that would allow reaching a larger market. And I just feel like there's sort of, I've seen descriptions of Tesla as a series of exponentials. So 3 went through its exponential growth. Y is in the middle of its exponential growth. Cybertruck's going to have its own space of exponential growth. The next generation 3 or next generation vehicle platform has a much bigger potential room for exponential growth. And let me dive into your tweet here. I'm going to read your tweet. Your tweet was, the Generation 3 family of vehicles, or next generation. I'm unsure whether this is Generation 3 or Generation 4, but let's go with Generation 3 for now. The Generation 3 family of vehicles will massively increase addressable market size, and production will grow dramatically. This platform, priced dramatically lower than the 3Y vehicle, should fill a market many times their size. It truly becomes a people's car. Apologies to Volkswagen. So can you explain that tweet? Can you provide a little more depth on that?
Yeah, I mean, if we think about the Volkswagen, that car didn't change its design in 30 plus years, sold many tens of millions of cars, out of all proportion to anything else in the marketplace, perhaps except for the Fiat 124, which Russia made famous. So there is a place for a people's car. There is a place for a car that, you know, everybody can buy. There's a place in almost every family for one of those. And so I think that this car that's coming is going to be that particular niche, whether it's for the teen growing up in the American family or it's the family car for the family in, you know, Southern Europe. I think what we're seeing, what we will see in that car is an every household kind of car. I mean, the market for that is in the tens of millions, because nothing's replaced the Volkswagen since. Nothing. I mean, maybe the Corolla, but the Corolla is still, a niche car and sold in that niche, and Toyota has got umpteen models left and right of it. So that's the role for that car, in my judgment. And of course, once we get to full self-driving and we get to, I mean, then that's a different game. And I'm not as bullish as you are on FSD autonomy coming in the next year or so. I think we're more than 2 years away. I don't know how many more. I don't know if it's more than 2 years but I see a place for the people's car, or the next gen, or whatever we want to call it. And I see the volumes on that becoming very, very large, and the margins being very, very high. Up to now, most car manufacturers have avoided really selling those models because their margins are very poor. But Tesla are going to make this car at an extremely competitive price for a Tesla at very high margins. That's amazing.
Yeah, there's been this story people have told, Gary Black being one of them, that Tesla needs to get out their $25,000 car. And I think that the next generation vehicle platform, they've said half the cost. And Tesla is selling a Model 3 in China for less than $40,000, I believe.
That's right.
So I think this is going to be a sub $20,000 car in some markets. And there's this thing that I think people don't grasp is if you sell a car for half the price of the one you were selling before, the market for that doesn't double. It might 10x.
Yeah.
Could you comment on that? Because I'm not saying I understand that. It's just, I just have the sense that the market is much bigger for a $20,000 car than it is for a $40,000. Can you?
Yeah, I think you have to temper that a little bit, because the cost of batteries are such that it's really difficult once you get below 25 to squeeze more out of it. We'd have to see, us climbing up that S-curve of cost on batteries, which is really difficult when lithium has risen so far. Now it's falling quite dramatically. I don't know how far it's going to fall. I think we're in a global recession, and I think that may temper the lithium prices. And then, we may get to levels of production, but it's tough. It's really tough to get much below 25. Even to get to 25 is a stretch. So I don't want to project on what their costs will be, but the volumes are going to be enormous. The volumes are going to be very high. I mean, I don't think the market has yet seen the full extent of the Tesla disruption. Nobody paid attention to Investor Day. None of these analysts have really put much credence in Investor Day, least of all Gary. I mean, apologies to Gary, but we don't understand the impact of what's coming from what's going on. Now, again, the impossible to the late. So it may not happen as quickly as we bulls tend to picture it, but it's coming, and it's pretty serious. I look very closely at BYD, because people are saying BYD, 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 but really speaking, they talk about their margins being 20%, but if you look at the bottom line, it's like 2, 3, or 4% at their best, in their best quarter.
Yeah.
So where those costs are coming and where they're coming from, I don't know. But man, they are, and now that their volumes have dropped so dramatically this last quarter, I don't know what their margins will look like. But anyway, so let me show you a little bit about what I'm.
Before you do that, I just want to address one point, which is we don't know how big the battery pack will be on the next generation vehicle platform. And the current model, the most common Model 3s and Model Ys, which are more expensive than $40,000, have an 82 kilowatt hour battery pack.
Yeah.
The next generation vehicle, I'm projecting the next generation vehicle platform will start with a 40 kilowatt hour pack and possibly smaller. The challenge is, and Elon has said this, to minimize the cost per mile. And one of the critical things there is minimizing the energy consumption per mile driven, or maximizing the miles per kilowatt hour. The Model 3 right now maxes out at about 4.5 miles a kilowatt hour.
Right.
And I think we're going to see this next generation vehicle platform hit 6 miles a kilowatt hour, which means a 40 kilowatt hour pack would get you 240 miles of range, which is not enough for Americans, generally speaking. But in a lot of countries, 240 miles of range is plenty. And that's probably lithium iron phosphate, which is low cost and also has high battery life, high long lifetime.
Well, from your lips, I think that's I think it's going to be. It's a struggle. It's a struggle. I mean, but the S curves are continuing, so we'll see. I mean, it'll be very interesting. The weight of the car is going to be very determinative, and of course the power density. So we'll see. It'll be interesting.
Okay, so you have something you want to show the audience?
Yeah, so I can go ahead and share my screen. Okay, so this is Gary versus Farhad, but really speaking, I wanted to start with the issue of Tesla's guidance. And I know I've put out a tweet about this before, but people keep multiplying the previous year's deliveries by 1.5 to get to what they think Tesla's guiding for. That's not correct. Tesla's guiding for a 50% per annum over multiple years. And that 50% started with a baseline of 500. So this is actually the guidance that they're giving between now and 2030. And this takes us to 28 million, 29 million in 2030, which, as I've said, it's going to be tough to get to. But this is the guidance, my reading of the guidance. And in fact, my tweet about this was actually commented by Elon, who said it was sensible. And then they even modified their guidance the following, the last quarter's guidance, where they stressed that it's, from this, it's over a multiple year period and it's 50% per annum. So that would take us to, for 2023, 1.7 million. And I think we're going to be over 1.8 million. It looks like it's fair to say that's going to happen. So they're on track for their guidance, but the law of large numbers means that as we get further into the decade, it's going to be more and more difficult for them. So that's what they're guiding for. And now the question is, can they manufacture that many? So that's the first question I tried to tackle. And I can't see, 10 years out, but certainly if we look the next couple of years out and we take what we've learned from them and think about the models that are coming and the volumes that are coming and the factories that they have, even without announcing anything other than the Mexican factory in the coming year, they get to they get to their guidance without not without difficulty, but they certainly could get to their guidance of 6 million, and that means that Shanghai will have to double by adding the next gen model, whatever it's called, and I really don't think that's a stretch for them. I think that's coming. Berlin and Austin, I think, can get these numbers given their footprint. And Fremont, I don't see Fremont going above the 750, So that's where I think we'll get to their numbers. Now, you talked about the deliveries of vehicles, and you correctly said that, we hit this peak in 2018, and then we've seen this dip down into the pandemic of 2020, and 2022 was an increase on 2021, but I think 2023 is going to be a significantly down year. So it's going to be tough if we look at 80 million cars being delivered to deliver, 20 million, 25% of the world's production of cars. But, I think that what we're going to see is a recovery to the mean. That's always been the case. If you look at over the century of cars being built, we've seen, a fall in the recession years or the war years, and then a return to the growth path of the past, and particularly with Asia exploding in terms of earning power. I think we'll see these numbers rise fairly consistently, and that, I think that remains true even in the world of autonomy. I think Asian numbers are so large, just so much larger than the West, that the potential for growth remains there. That's my thesis anyway. I hope that makes sense to you, Warren.
Yeah.
So then Gary argues this whole point about the number of models that they'll need and the coverage of the market and the demographics and so on and so forth. So I did a study of the OEMs, at least in the United States, and the number of models that they offer, to see if it's true that the number of models you offer really are predictive of the market that you'll fulfill. And you'll see that there is a correlation. There is a correlation, but it's not a great correlation. In fact, if you look at Tesla, they have 4 models, but they beat out Volkswagen, who have, can you believe it, 47 different models in 5 different brands. Even Subaru have 9 models. And, Tesla's, significantly selling significantly more than they are, about, 25% more, 30% more. Mazda, who run a very, very clean ship in terms of their models, because they don't have sort of a legacy to live on. They're less than half of Tesla's volume, with, double the amount of models. And so we go to, BMW, that has this profusion of models, and Mercedes, that has the profusion of model, kind of one model for every niche of wealth that you can get, which is kind of crazy. And Tesla's eating BMWs and Daimler's lunch.
Yeah.
Now, when you go above Tesla sales, it's a little bit less clear, because you get to General Motors, have 37 models, believe it or not. 37 models. They're selling 580,000 units, which is, about 3 times Tesla's sales, with, 9 times as many models. So, there's some truth in that, but honestly, I think it's far overdone. I think Tesla, with 6 models or 7 models, if you take the trucks and you take the Model 2, I think they'll outsell General Motors fairly significantly. That's my view anyway.
Well, isn't it sort of, if you look at Ford, okay, 477,000 units in a quarter, probably 250,000 of those, or 200,000 of those, are the Ford F-150. I think
yes.
they have, I think for
260,000.
So for Toyota, it's the Camry and the Corolla that are the Highlander, I think, and the RAV4. They've got, like, Toyota has 27 models, but 4 of them are probably more than half of their sales. And Ford is probably the same thing, that, of the 30 models or so that each one of these is selling, less than 5 models are generating way more than half the sales, and the other models are just sort of
many models are just plastic, just some plastic badge or finish. And so they've got different brands selling the same thing, particularly, so yeah, I agree with that 100%.
All right.
All right. So, I think that Tesla with six to eight models are going to be the top selling brand. And then I looked at numbers in terms of margin. Can Tesla maintain the margin with the growth? And, BYD has been spoken of as this great competitor, eating Tesla's lunch, blah, blah, blah. I think this quarter kind of blew that out of the water, although one quarter is not, BYD has come out from nothing in the last year. It's been a very focused effort on their part, very strategic, very impressive. But if you look at them, they're earning a gross margin of 17% to Tesla's 25% for this period of time. So Tesla's margin is 50% more than them. But look at the net margin. This is amazing to me that they can eat 13% of their revenue in operating costs, compared to Tesla at 8% of their revenue in operating costs. I just don't see the growth coming.
Yeah, this is Zach Kirkhorn's big pitch for don't just look at our gross margin, look at our operating margin. And Tesla finds all kinds of they don't just innovate in manufacturing vehicles, they innovate in running the business. And dramatically successful. And I just want to say, by the way, I'm rooting for BYD to succeed.
Yes.
I think the world is a better place if there's at least one other significant EV maker. And I think when we talk about the market share, one of the reasons that Apple was able to grab so much market share and Android was able to grab even more is because the other makers disappeared. There's a certain point where some of these companies are going to die. And when they die, that's more market share available.
Yeah, and I'll talk about what I think. I mean, the one thing that I will say is that everybody, and I'm always on Gary. I kind of give him a hard time, but he talks about getting to 75% or X% of the market being electrified versus or 60%, I think is his number. I think at a point in time it just dies completely. I don't think it goes, step by step by step by step by step. I think it goes step by step by step and then bang. And that's what happened in if we talk about the cell phone market, if we talk about if you talk about VHS versus beta, same thing. You can compete until a point where you can no longer afford to be 60% of the market or 50% of the market. You can no longer afford to be in the market. So you disappear. Right. And I think that's what's going to happen with ICE. I think ICE is going to stick to it and pull the 2027 mark, and then you're going to see these companies die, and you're going to see them stop making these ICE cars, and it'll only be a niche market, for hobbyists. That's what I think.
Right. For people who are watching this who might not be familiar with Tesla, just say what a lot of people don't understand is the cost of owning a Tesla. Even if the Tesla is higher priced than a competing car, let's say a Model 3 versus a Camry, although right now Model 3 is about price competitive with Camry with the tax credit. But even if you, let's say, take out the tax credit, because it's so much less expensive to charge your car versus putting gas in it, because you don't need oil changes, because the maintenance is lower in general, and because the residual value of the vehicle is higher in 5 years, over 5 years, it costs less to own a Tesla than it does to own a comparable car, even a less expensive car. And as Tesla continues to innovate, this next generation vehicle platform is going to accelerate that change. And that's right. Sort of why people making purchasing decisions are going to say, wait a minute, now I can buy this vehicle for about the same price as the vehicle I was thinking of, and it's going to cost me $100 or $200 less a month to own. That's going to wake people up.
And that differential is going to greatly increase quite dramatically as ICE volumes dip and EV volumes rise. Things are going to change dramatically. And everybody forgets about Tesla's charging network. Everybody talks about all these competitors are coming. If the competitors are coming, where are the charging networks for them? Where are they? I mean, it's a little, anyway. And then Gary tells me, listen, everything you said is great, but you know, where's the proof on the demand side? I mean, you know, how do you translate to therefore you can sell 20 million units? And that, you know, brings us to the point that you made really very eloquently earlier, Warren, is just look at what happened to the smartphone market. And we can talk about other markets where the same thing has happened, you know, whether it's photostatic copiers versus, you know, mimeograph machines, whether you can talk about this until the cows come home, but actually what happens is that you don't get a, you know, gradual descent of markets. You don't get a gradual climb of markets when it disrupts. You get an almost instantaneous. I mean, you go from 172 million to 1.4 billion in like 6 years. 6 years.
Yeah.
And you go from 1.3 billion down to 370 million in 5 years.
I can't believe they're still selling non-smartphones.
That's right. Because they
where are they selling those? It's like film cameras.
In the Far East. In the Far East. I mean, they're in India, there are still, I travel to India a great deal. I used to for my company. And there's still a very large number of people in the Far East who have, you know, phones with buttons on them.
I feel it's like another good analogy is digital cameras versus film cameras. Not only did digital cameras displace film cameras, then the phones displaced the digital cameras. It's amazing how technology changes, and you think you've got this digital camera thing and you're on top of the world, and all of a sudden this phone comes out and you're like, oh no. And they didn't. And the digital camera people didn't see the asteroid coming when the phone came.
And these market analysts who work in, you know, consumer products, I mean, soap is easy to analyze because you've got 50 years of experience and, you know, markets that have been, you know, carefully analyzed down to the last household. This is not soap, baby. This is a whole different ballgame.
Yeah.
So the one thing I will say that, you know, is at the end of the day, the big difference between Tesla and all the other companies is execution. Yes, they deliver on their promises late because their promises are miracles. And so, you know, they do this conversion of the impossible to the late. But look at the margins. I mean, it's incredible. It is just incredible. Their gross margins are industry leading. I mean, you'd have to go to Ferrari and build cars to compete with Tesla.
Which is extremely low volume. I've seen people say, oh, you should invest in Ferrari instead of Tesla. It's like, how many people can invest in Ferrari? You know, it's just such a small market company.
Yeah.
And they are beautiful.
Warren, I'm the guy who bought a Ferrari and canceled it in order to buy a Tesla Model 3.
Yeah.
So I know a little bit about the car, and I tell you, there's no doubt in my mind that it's going to be extremely difficult for these companies to compete. Extremely difficult. And what's interesting is not just the gross margins, but actually the operating costs of these companies are incredibly high compared to Tesla. So it's more than just the car and the technology, it's the execution from a business perspective. And by the way, I would say that Elon is the guy to, I mean, I know Zach is fantastic and he's done a great job in managing the finances of that company, but in terms of operating costs, there's nobody as tough as Elon in that sphere. And he's not given, you know, the level of credit that he should. I know a lot of people want to be on the board of directors of that company, but my gosh, when you have a CEO that keeps his eyes on those aspects of cost, you have an ideal CEO, in my judgment.
Yeah.
Anyway, you know, that kind of, when you have this kind of lead in margin and you have this kind of lead in terms of technology, it's very difficult to do the market analysis because the level of disruption makes projections so difficult.
Yeah.
So, in the end, Gary's right. Whether it's, 10 million or 20 million, it is so much, and the margins are so high, and the profits are so high that it's going to be worth a heck of a lot of money. So, in the end, I think his point is well made, but I think it's going to be higher than he thinks it's going to be.
Yeah, just on this graph, I think one of the things that this graph leaves out is this is gross margin.
Yep.
And I think all of the companies except Tesla have a massive amount of debt, and the cost of servicing the debt is not accounted for in the gross margin. That goes to operating margin or net margin. I don't know exactly where it is in the
It's after operating margin, it is net margin, yeah.
So, one of the challenges these companies are going to face is they may still be profitable on a gross margin basis, but they're not going to be profitable on an operating margin or net margin.
You have to be a little careful about that, because a lot of the debt that these companies have, you're correct about the debt, but a lot of it, not all of it, but a very significant amount of it is financing purchases of cars. And that's a double-edged sword, because they make a profit on it. It actually contributes to their net margin, which is why they can allow their gross margin to become so slim. But it's going to kill them, because they're financing ICE cars for 4, 5, and 6 years out. And that could be a devastating blow to them when, ICE cars fall off the cliff, as I believe they are going to be. They are going to fall off the cliff. So that could be a killer.
There's more than just, I'm not sure what the killer is. I think there's multiple killers. One killer is let's say they do a lease, and at the end of lease, the resale value of the vehicle has fallen a lot more. So that's one way they take a hit. But another way they take a hit that a lot of people aren't talking about is there's a lot of people who are underwater on their car loan, and they're walking away from their cars. And so they financed a car and they have this loan on the books, and then the consumer decides, I'm not going to pay for this car anymore, and they walk away and let it get it repossessed. And the car company now has a much less valuable car than the value of the loan. And
that's the basis of my thesis about the problem of this debt.
I mean, it's both the value of the car returned on lease and I think some of their debt is not financing cars, but it's just debt. And they need to sell a certain number of cars and generate a certain amount of revenue to pay for all this debt. And if their sales shrink, as Tesla grows from 2 million vehicles or so this year to 6 million vehicles in 26 to 20 million vehicles in 2030, over time, they're eating market share from these other companies. And as these other companies lose market share, it becomes harder and harder for them to pay their debt.
Yeah, I mean, if you think about General Motors or Ford, for that matter, and we've seen Ford's plans, and I was shocked by Ford's plans. It's making a gross loss on every electric vehicle it sells, a very large gross loss, not a little one, a very large one. Not as large as General Motors is losing on each one of their ridiculous vehicles, but a large one. And they published how much of it. And they're making this huge gross loss. I don't see their path to a gross profit.
Right.
The numbers that they're talking, I just don't see it. I don't see how they take that cost out of that car. I don't think they've done the heavy lifting on the engineering. I mean,
right. That's a problem for Rivian. That's a problem for Lucid Motors. That's a problem for a lot of companies that are trying to make EVs. Volkswagen as well. There's a challenge in manufacturing them at scale to get to the point where you have a positive gross margin. And positive gross margin isn't enough. You need positive operating margin, positive net margin.
It's interesting. I think that for the legacy manufacturers versus the Rivians and Lucids, the new entrants, the problems are different. But if you look at Rivian and Lucid, the problem they had was too much cash. You know, the halo effect of Tesla in that market, plus the easy money, the low-cost money of the last decade, gave them huge bundles of cash. And they have misspent it so badly. They've allowed their costs to get out of control. And that's the one thing Tesla never did. You know, that was Elon's leadership. That's why he fired the previous guys, Eberhard and company. He fired them because they just did not understand that you can't make something and sell it if the pieces that you use to make it cost more than you sell it for.
Right.
And Lucid and Rivian just didn't learn that lesson. They hired a lot of guys from Tesla thinking they're going to buy the magic. But the magic wasn't that. The magic was part of that. It was the science and the engineering of it. But the other part was this discipline, this absolute iron discipline. And these new manufacturers didn't have it. And it's going to be incredibly difficult to get there in a tight money market. Now, for the legacy manufacturers, it's a different problem. It's a problem of engineering and attitude. You know, to bring the Ford or GM hierarchy into trying to build something new is kind of like, you know, button phones to smartphones. It doesn't translate. It's going to be hard. It's going to be hard. So I think Tesla's going to get there. That's just my gut, but no, I've been wrong.
Yeah, I just want to say really quick about Rivian. I think Rivian got enough of a cash pile that they might be able to figure out their cost structure before they run out of cash.
I don't know that a culture is able, you can't buy culture. You can't buy culture. If they've gone down this path to actually get to the other path, I don't think it's a matter of money anymore. I just don't think it's a matter of money. When you start down that path, how do you know, it's when you grow up in a particular environment, it's very difficult to adapt to a completely different environment.
Right. I think Rivian's answer to that is that they've got a next generation vehicle platform coming, and I don't think they can squeeze the cost out of the current platform, but I think they might be able to squeeze the cost out of the next platform. And I think they have the cash that, I'm not saying they will succeed. I think they have the cash that they might be able to succeed. We'll see. Lucid.
Haven't seen the change in culture though.
Right. I mean, well, yes, I mean, I agree with that. I don't know the answer to that. If they are able to say, okay, now we need to make our next generation vehicle at much lower cost, we'll see if they're able to do it. I mean, there's so many, even, you know, we criticize Ross Gerber a lot, but early on, Ross told me that Lucid and Rivian were too complicated and too expensive to make. I mean, Ross told me that more than 2 years ago. So
yeah, but now that he's opposed to Elon politically, he thinks Rivian's great. By the way, if you want my bet, my money, it's on what you said earlier this evening. It's on Hyundai. I think that company is a great company. I think they're going to make it. I think they're going to be a very tough competitor.
They have the best. They have access to batteries with Korean battery manufacturers. They have. They're making probably the most competitive EVs for the mass market at volume as anyone. So I think they have the most potential. I think the other thing you didn't mention about all these legacy automakers is they're all extremely bureaucratic. And they all have, you know, legacy dealership issues and you know, people don't realize this, but the car dealers in America are one of the most powerful lobbies.
Yeah, don't get me started on car dealerships. Wow.
No, but they are a tremendously people see the United Auto Workers as being a very powerful union with close connections to Joe Biden. What people don't see is every congressional district, every state senate, every state legislative district has multiple car dealers who are extremely wealthy, and they're extremely protective of their income and their revenue, and they have a lot of employees, and they have a lot of influence. And it's not necessarily that they have influence in the White House. It's they have influence in the legislatures. and a lot of policy is made there. And the biggest dealers probably have influence at the governor and presidential level. And so that helps protect them in the short term, but it doesn't help their company that they're dealing for in the long run. And I think Hyundai, probably being a relatively late player in the auto market in the US, is probably a little less dependent on that dealer network.
Well, I don't know. I don't know. But if you talk about the dealer networks and the charging networks, there are two, enormous problems for legacy. Enormous problems. I don't know how they get past it. Never mind the, structure of their company and so on.
Yeah, the bureaucracy. There's so many things holding that. One of them is just they're so bureaucratic that, my general sense is that General Motors and Ford are driven primarily by their CFOs. That it's a money game. They're not engineering driven the way Tesla is massively engineering driven. And these other companies are more like, there's this whole battle within the company. How do I shift costs in a different way to make my division look better so I can look better, down the road? And Tesla just doesn't play those games.
I think that the GM and Ford struggle is bureaucracy. Yep. I think that's what it is. And I think, one can imagine that BYD doesn't suffer from that, but BMW, Volkswagen, Toyota, and Daimler for that matter, I would be worried.
Volkswagen
worried.
Also has a problem that a large percentage of its shares are owned by the government of Germany or some German, maybe it's Bavaria. I forget which one of the. It's either
State
one of
of Bavaria, yeah.
Yeah, so there's stockholder-driven companies and there's stakeholder-driven companies, and Tesla is driven by shareholders. And the largest shareholder is the CEO. All these other companies, they have this whole notion of stakeholders having an influence over how the company is run. And that's just one more way in which it's difficult for them to innovate in so many different areas of the bit. You have to innovate on the cars. You have to innovate on the software. You have to innovate on the supercharger network. You have to innovate in how you structure your company. There's so many different ways of innovation that Tesla innovates in all areas, and these other companies just really struggle to make changes in so many different ways.
Yeah, well, the innovator's great dilemma is what happens when the next innovator improves upon your innovation. And so I've been waiting to see that happen. And, everybody got excited. Everybody's getting excited now about BYD. I'm not that excited. But I think, if anybody could do it, it may be Hyundai. It's certainly, not, Volvo. And I just don't see anybody in this list being able to make it. But
now, did you have another slide to share, or is this the last one?
No, this is about it. I had this slide that I had earlier or tweeted earlier, just giving the auto margins since inception, just to show that Tesla had one quarter where they had a negative margin. And just even in the roads at time when they had this tremendous problem with their management, but this is just an illustration of just how disciplined the company is. That they were the bleeding edge, the absolute bleeding edge, and they never allowed their margin to slip below zero, except on their opening year. So it's amazing to me. It's just stunning to me that these car makers can't find their way to do it. Just amazing. Anyway.
And I want to just see if there was something else. I think there was something else in your tweet thread that I wanted to talk about. We were talking about how the next generation vehicle platform scales. And I think one of the things that people think they call it the Model 2, which I reject. Tesla has explicitly rejected. It's not going to be the Model 2. They've been very clear with it. My favorite joke is it's going to be the Model Q for Tesla Q, but I don't think that's going to be it. But I think what you were saying earlier, that they can diversify the number of models, it may be that this next generation platform, because they've never said it's the next generation vehicle. They've said it's a platform.
It's a platform, yeah.
So I think we're going to see a commuter vehicle that's probably designed to be a robotaxi. I think you mentioned this. There might be a van on this platform. If you look at the van market, the cargo van market, the business van market, we tend to see a smaller van, like there's a Transit Express or something like that, and a larger van. So I think we might see a van on the Cybertruck platform and a smaller van on this next generation platform. So I think a lot of this, I think this covers a lot. And I think the big thing that we probably should talk about now, where you and I disagree, I don't think we disagree that much, is the insanely gigantic future of self-driving cars.
Yeah.
You said you think it's more than 2 years away, and I don't know, right? All I can say is, if you look at the progress of artificial intelligence in general, no one saw ChatGPT coming. When deep,
I don't know about no one.
Very few people saw ChatGPT hitting what it hit so fast. Not no one, but very few. And if you look at AlphaGo, for people who haven't watched it, watch the AlphaGo documentary. There's this, I think it was Google's DeepMind was developing a computer software to play the game Go, and they're like, oh, it'll never beat the best human in the world, and it did. And it's, you don't think it's there, you don't think it's there, you don't think it's there, and then, oh my God. And I'm not saying you're wrong that it will be more than 2 years. I'm saying we don't know when it hits. I drive FSD beta. I assume you drive FSD beta. I still see holes. I still see flaws. I have a particular intersection where it's a sharp bend to the right up to a traffic light uphill, and then you crest the hill as you go through the light, and you're supposed to be making a left turn. And my car, on version 10.69, 90+% of the time, it would bail out and make a right turn when it's supposed to make a left turn. It just, for some reason, didn't see it. On version
I've got
11,
important news for you.
Yeah.
Do that drive 4, 5, or 6 times and send a message each time.
Oh, I actually did this already.
Okay.
I did this already.
And let's see within a week or so whether it doesn't fix the problem.
Well, I've done it once. I'll probably do it again. But it's now with my Model X and version 11, I would say it's getting it right about 50% of the time. Now, that's not where I want it to be, but it's making progress. And that's from 10.69. And sorry, in my Model 3 with 11.3.1, I did it twice. It got it right both times. On my Model X, I would say it's about 50%. It might be a little better than 50%. It sort of depends on how it ends up approaching the intersection.
Right.
If there's other cars there, and it can be in either the right lane or the left lane. If it chooses the right lane, it tends to make the right turn. If it chooses the left lane, it tends to stay and make the left turn. Sometimes it'll make the left turn from the right lane. It's just quirky. But I do think that, yeah, I will be recording it again and sending it. I expect to have 11.3.4 soon. I got it on the 3. I don't have it on the X yet.
The reason I'm raising that issue is because what I've seen, Greenie only spotted this ability to update maps or to send map updates to Tesla and update the map from a Tesla update. And I have experienced with 10.3.3.
11.3.3.
Yeah, I experienced the car learning to solve a problem that has been insoluble for me for every issue, for every release up to now.
Yeah.
And it happened during the time I had 11.3.3. When I got 11.3.4, it regressed for a whole week and came back again. Now, it could be, even the multiple times, the 6 times I did it each way, could be, it got it right for that percentage of time. But I think it's learning. I think that they have resorted to updating maps from fleet information. And this is an important change, a very important change. And I think it's a very valuable change.
So taking this forward, I think what the reason for the shirt, the insanely gigantic shirt, is if we get to the point, and I think we will get to this point, whether it's, and honestly, it doesn't really matter whether it's 1 year, 2 years, or 5 years.
No, it doesn't.
The longer it takes, the more Tesla vehicles on the road that are capable of it. So I don't know that it matters a whole lot. But when we get to that point, currently my car, I drive it 2 hours a day on average. Once it's capable of driving on its own and acting as a robo-taxi, I'm going to press the Go Make Me button on my app. And the car is going to go, like right now, my car's sitting right there. Like I see my car, I'm sitting in a spot where I can see my Model X. Once that happens, I'm going to press the go make me money button, and my car is going to go out and act as a robo-taxi for at least 8 hours a day and maybe more, and it's going to make me money. And you're going to have, let's say, 5 million, 10 million Teslas on the road that are going to start operating as robo-taxis, and the value creation, and Tesla's going to get, let's say, 30% of that revenue. And when it crosses that threshold, Tesla's currently selling FSD for $15,000, and maybe 15% of American customers buy it, and almost none of the customers in the rest of the world buy it. When it crosses the threshold, they're probably going to sell it for a lot more than $15,000, and everyone's going to buy it. And they may not sell the car without it, because the value generation now, I can take my car and just for people, I'll give you people my math, and you can tell me what you think of this. A really simple explanation of this is, currently Uber and Lyft charge about $2.50 to $3 a mile. That's the all-in cost for the customer riding in an Uber or Lyft, including tip, let's say. You don't tip a robo-taxi. So if they can undercut, they can still operate at $2 a mile revenue and be cost effective. But I think if you're looking down the road a little bit, I think we're going to see these vehicles selling rides for, let's say, $1 a mile. Long term, it goes lower than that, but just imagine $1 a mile, which is massively undercutting Uber, Lyft, and taxis. The operating cost of a Model 3 is around 15 cents a mile. That's the all-in cost of owning, including amortizing the value of the vehicle over the life of the vehicle, is around 15 cents a mile. So you're making, and then you figure 60% of the miles are paid. So you're making 60 cents a mile on 15 cents a mile cost. If the vehicle drives 100,000 miles a year, you make $45,000 a year on the vehicle. And I think and the next generation vehicle platform will be 10 cents a mile. So the value creation there, and if Tesla builds its own fleet, this is where you go crazy, right? If Tesla builds its own fleet of, say, 10 million vehicles, which Elon said they would do at Autonomy Day, if they're operating these vehicles and they're not sharing revenue with anybody else, then they're probably making $50,000 a year for each car, times 10 million vehicles is $500 billion a year in profit, in gross profit. Now, I know you're poo-pooing that.
I'm not. All I want to tell you is that, eventually, water finds its own level. I mean, the iron law of economics doesn't allow them to make $500 billion a year on ride sharing.
Why not?
Because that amount of money is such that other people are going to invent exactly what they've got and compete.
Right. So this is one of the things that people say as well. This is actually, you've actually kind of parroted Gary Black there unintentionally. Yeah. Gary says they're not going to be able to self-driving, but when they do, the other companies will be right behind them. And I look at the competitors, and Elon's talked about this, and I don't see anybody doing what needs to be done, which is generate a massive amount of data, a massive amount of compute. So Tesla has 4 million cars on the road that are collecting data, sending data back to a supercomputer. They'll get there, but they won't. By the time they get there, let's say these other companies get to the point where they deliver a car that's capable of self-driving. They'll get there 5 years after Tesla. By that time, Tesla will be 10 times safer than the one that first crossed the threshold. Tesla's operating cost will be half of the operating cost of this other company's vehicle. There's actually, let me just hit you with this. There's this challenge with there's this concept called first mover advantage. And I'm going to use Starlink, the Starlink satellite network, as an example of this. SpaceX is building its Starlink satellite network that provides internet service to people who don't have good local internet. And it's expensive. It's $110 a month or something like that. I'm paying $70 a month here. So I have a Starlink antenna and I'm not using it, right? Yeah. But Starlink is going to build out this network that's going to serve maybe 100 million people, 100 million customers. Now, it's going to cost them a certain amount to build out that network. And SpaceX has a lower cost of building out the network because they have their own launch cost. The other companies either have to pay SpaceX to launch their network and pay SpaceX a margin, Or, Amazon in theory is going to build out its own Blue Origin network and launch them on that, but that's not really, there's a lot of hurdles there. But if you're the second player to the market, you can't undercut the first player on price because they're a lower cost operator than you are. And you get to this point where you say, wait, hang on, am I going to invest the $100 billion I need to invest to become number two in a market that I won't win?
Nobody goes into a market thinking that they're entering that market to be number two.
But they're looking at it saying the prospect of somebody beating Tesla on self-driving, delivering not just a better self-driving system, but one that operates at lower cost per mile and has a supercharger network to charge the robo-taxis. There's so many advantages that Tesla has.
Everything you say is true. Everything you say is true, but there's an iron law that has worked, for eons, since the invention of the first till or the first wheel. And that's an iron law. I haven't seen it broken yet. Maybe Visa and MasterCard broke it. I don't know. It's really, really, really tough to maintain leadership in such vast markets. And I think that if anybody that I can identify has the ability to ultimately compete, and that'll be Mobileye, they're doing really, really good stuff. And I think it's going to be interesting. I think the fact that Tesla has the ability to integrate the tool fully, I think that's magical. I think they have the lead at the moment, but the difficulties are very, very significant. And James Duma is James Dama is probably the most eloquent on the subject, and he's very sure they're going to get there. I've been in this industry for a long time and feel very confident that they're going to win, but they're not there yet, and it could be a year, 2 years, 3 years. We don't know. I don't think Tesla is.
When you talk about it being difficult to stay on top, Apple has stayed on top with the iPhone. Android's there. Android sells a lot of phones, but Apple gets a much greater market. Apple makes a lot more money on them. I don't think Google makes a huge amount of money on Android. I don't think the phone makers make that much money. I think it's something like Apple has 20% of the market and 80% of the profit.
Yeah, but Apple's leadership has nothing to do with price or value. Apple's leadership has nothing to do with, their technical leadership. It has nothing to do with their product or product quality. It has to do with this entire, ecosystem that they've created. And I think that's where Tesla's leadership lies. And that's the important part of it. But to argue that they're going to be, a monopoly in this market, Apple's not a monopoly in this market.
Right.
But you don't have to be a monopoly in the market. If your business model is right, and your pricing is right, and your technology is right, the strategy is more important than this so-called monopoly. So,
well, wait. Let me just point out this. When I say they're going to have a fleet of 10 million vehicles, the global fleet is 2 billion vehicles. If the 10 million vehicles replace 5 cars each, they're only replacing 50 million out of a global marketplace of 2 billion vehicles. So it's not like the 10 million vehicle fleet is that big of a, I think they trend towards 100 million vehicles, making significantly less per car. I think the threat to Tesla's financial success in the long term isn't that some competitor is going to come along and take market share from them. That'll happen a little. It's that they will get so big that governments will say you're too big. That if they're making $500 billion a year in gross profit and eventually $2 trillion a year in gross profit on 100 million vehicle fleet, at some point governments are going to be unhappy with Tesla having so much success. And I actually think Tesla will break itself up and spin off the robo-taxi network as a different company, and spin off Tesla Energy as a different company, and spin off Tesla China as a different company to avoid the perception that they're too big.
Yeah, and now we're in the realms of, it's too complicated. It's, to try and gauge where it's going to go. I mean, the levels of freedom in that level, to that degree of future telling is just beyond my ability to comprehend.
Well, let me push your ability to comprehend on something else then, because you mentioned you spend a lot of time in India. So I think that the fantasy robo-taxi fleet that's selling rides for $1 a mile or 50 cents a mile is still too expensive for India. That if you have a Model 3, even if you get your price per mile down to 50 cents a mile, the vast majority of the population of India can't afford that. And I think that there has to be, Kathy Wood talks about ultimately the robo-taxis will end up costing 25 cents a mile. And I'm not sure what vehicle she's referring to, but she thinks they'll be able, and maybe it's the van, right? It's the van that becomes a mini bus and they're able to deliver rides at a lower cost. But I think there's potential for, I don't know if you've heard me talk about my single passenger vehicle that I'm working on. I think that if you have a vehicle that carries 4 or 5 people, it has a certain width, it has to have a certain mass, it has to have a certain battery pack. There's a limit to how inexpensive you can get that vehicle to be on a price per mile basis, on a cost per mile basis. But if you go to a single passenger vehicle that's half the width and less than half the mass, I think there's potential for getting that operating cost, the all-in cost of running this vehicle down to maybe a penny a mile and selling rides for 5 cents a mile. And that may be inexpensive enough to get not the poorest people in India, but the middle class in India to take that as a ride. What do you think about the balance between these vehicles like Model 3 and this next generation vehicle that might be Corolla sized to going down to something that's much smaller, and the viability of that in a market like India?
Have you been to India?
No.
Okay. The streets are completely full of tuk-tuks, of little scooters with a 2-seater carriage at the back.
Yeah.
That's the standard transport. That and actual motorbikes. By far the gigantic majority of what you see on the road. And then there is the beat up old cars, a lot of them. But then there's a fairly significant middle class of smallish cars, small cars, and then some a little bit larger. But the streets are absolutely jam-packed with these tuk-tuks. Absolutely, wherever you look and wherever you go. And they're designed to carry 2 people, and I've seen them carry 5 people with some luggage, strapped to it. So that's the kind of vehicle. I don't think a single passenger vehicle will cut it. Too many people require, the mother and child, or the couple, or to be traveling together. So for them, the 3-wheeler, 2-passenger, 1 driver, that's the standard. And by the way, the prices are down to the below 5 cent a mile mark, way below.
How do you think they pull that off when you consider the amortization of the vehicle, the energy cost?
How long do you think those vehicles last?
What?
How long do you think those vehicles last?
Well, but then you have to amortize the value of the vehicle over the life of the vehicle, over the miles.
How many miles do you think it does?
100,000?
I think the average lifetime is forever.
Okay.
I mean, they just keep changing fixing it and changing the parts. I mean, it's amazing.
Yeah.
What cost they get that down to. I don't even know that I know the price.
I'm going to ask, I have somebody I can ask that question. I know somebody I'm going to ask. One of the guys on Twitter who's building his electric tuk-tuk. I'm going to ask him what the costs are. All right.
Yeah.
Well, so this has been great. I think we've gone long enough. So it sounds like you're converting over towards Hyperbole. You may not be there yet, but you're making progress, and I'm pleased to see your growth. Did you have anything else you wanted to say before we wrap up?
No, thanks for having me. I appreciate it.
All right. Thanks for coming on. For everybody else, please check out the t-shirts at elonbits.com. Please check out my other videos. Support me on Locals platform, Patreon. Twitter subscribers is a new thing. And as a YouTube channel member, like this video, share, and subscribe. I'll put a link to, what do you want me to link to? I'll put a link to Larry's Twitter account.
Sure.
And thanks everybody so much for watching. And thank you again, Larry.